Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, June the 2nd. Let's jump at our news items this morning quickly. As we can see, we're nothing on the docket for today, but we have a full slate of reports for tomorrow, including non-farm payroll, unemployment claims, ISM services, crude inventories, and of course Friday, heavy day with beginning with Fed chair speaking at 7, averagely our earnings, and of course unemployment rate. So very interesting pieces of news. The market a little flat this morning. As we move into our analysis, let's quickly jump to our daily chart. As you can see, an attempt to the upside. We're again right back into this little area here where we have the very tight ranges. With our ATR once again begins to head south, lower volumes after the holiday, so we're pretty much in this solid moving sideways market, which makes it difficult for us to trade. Now, what we have done is we have just stepped up our analysis just by adding another time frame rather than trading our usual time frame. We just lowered it. It gives us more granularity in the market, and it looks clearer for us. So it's helped us to make some really good decisions in these really tight markets. Let's look at the overall market here as we look at this next time frame here. Remember our key area here, double top, market returns to use it as support, bounces off, tries to continue to move higher, and as you can see, we did establish a nice little trend line here where the market right now is actually struggling right in that area, between this particular area that we have previously noted as a particular price level and this support here. Everything's happening here between these two areas here, which leads us into our analysis chart, which clearly looks as a compressed sideways market, which gives us the evidence. This is the theory that we've been espousing since we started looking at time frames. This particular time frame pretty much solidifies our hypothesis. Market moving slowly downwards, but at the same time sideways. But it's compressing as we get lower lows here and higher highs here, and higher lows and lower highs, which of course means clearly compression. How do you play compression? You can't play in the middle. You can't be brave in the middle here. This stuff here, you got to be very careful here with. The best thing to do is just wait for breakouts. Breakouts either to the upside or to the downside. Keep your eyes on what's happening within here to see if any kind of substructure continues to offer you more evidence of a potential low. In other words, maybe something like, instead of moving lower and equaling and then coming back and probably another lower high, maybe coming back and equaling here and then potentially another lower high. As you can see, then you start seeing another substructure forming, and that's giving you the evidence of movement further down. Now, that's what we're looking for. In the meantime, you just have to sit on your hands and you just have to wait for the confirmation to come before you pull the trigger. Take care. Have a great session. Let me know if you have any questions.